let's go over these Americans that are getting rich on inflation. What does it tell us about the overall economy? And what does it tell us, maybe even more so, about the principles of economics and what we should be focusing on as the average Joe and Jane or the political leaders? I mean, what should we really, really be focusing on if our objective is to increase the standard of living for as many people as possible? Right here, wealth creation is booming as multimillionaire population jumps 5.2% in the United States. So one of the takeaways from this part of the video is if you own asset prices, you're doing well in an inflationary environment because the assets you own, assuming you own NVIDIA and just the high flyers, they have gone up more than the price of the stuff you buy. So you have increased your purchasing power, even if your expenses are denominated in dollars. So good on you. And same thing, well, if you own a home over the last 5 years, it's most likely gone up more than the rate of inflation. And even if it hasn't, you're probably levered. So on a leverage basis, if you buy a house for $100,000 and only put $10,000 down, and then let's say you have 10% inflation, so that the price of the house goes up to 110,000. Well, now all of a sudden you have 20,000 in equity, but the rate of inflation, the price of goods and services only went up by 10%. You see, so if you're leveraged, even if your house is just going up in nominal terms, not in real terms, you're still going to increase your purchasing power. But the main thing I wanted to highlight with this video, or excuse me, with this part of the video, is notice what they're saying here. They are associating wealth with money. So just the more money you have, the wealthier you are. Really? I wish I had some currency in my back pocket here. So ask the Venezuelans if that's true. I mean, in Venezuela right now, I think about how many billionaires there are. Even in Colombia, here where the peso is 4,200 roughly to $1. Right? That almost everybody is at least a millionaire. In fact, everyone absolutely is a millionaire here. Does that mean that everyone is rich? Does that mean that there's tremendous wealth creation just because everyone here is a millionaire, even the housekeeper? No, because all you're doing is measuring the amount of money, or you're measuring wealth in terms of money. So what's the real message here? The real message is that wealth has nothing to do with the amount of currency units you have. It's stuff. Goods and services. So this is what everybody gets wrong, and what I want to encourage you guys as the Rebel Capitalist audience, or if you're watching one of my videos, or if you're just looking at macroeconomics on your own, and you're trying to determine, okay, on net balance, is this going to be a positive for society at large, for the average Joe and Jane? And you have to start by asking, not are people going to make money on this? Not is this going to put more money in people's pockets? No. You have to ask yourself, is this going to create more goods and services? Because if it's not going to create more goods and services, and it just puts money in people's pocket, the only thing that you're going to get is consumer price inflation. And no one's going to get richer except for the people that own assets, assuming that those assets go up in an inflationary environment, which isn't always the case. But you see this theme throughout the entire article. The U.S. is the top nation in the world for wealthy. Oh, okay, yeah, I agree with that, but not by the way you're measuring it. That's for sure. Because if you're just measuring it by the number of millionaires denominated in dollars, so what? So what? The number of multimillionaires worldwide jumped 4.4% in 2024, with the share of wealthy Americans with more than 10 million grew by 5.2%. Okay, and I'm not saying that their purchasing power didn't increase. I'm just saying we're measuring it the wrong way, because it takes the emphasis off of where it should be, right? When you're thinking about tariffs, we're going to talk about that next. You've got to ask yourself, is this policy going to create more goods and services? Are the American people going to have access to more goods and services? Because if the answer is no, then it's not making us richer, even if it does increase wages or whatever it may be. I see so many people in the comments of the videos and on Twitter and whatnot talk about, well, it doesn't matter if we just don't import anything because we'll just buy American. And that's great. That's awesome. But again, it's trade-offs, right? The benefit is that those American companies see more profits potentially, but you have access to less stuff, don't you? So then you have to ask yourself, what's your definition of wealth? Is it stuff or is it money? Maybe I'm wrong. You guys could have a completely different opinion, and you guys could have some very good data or rationale to back up that opinion. I'm just saying we can't just start with how much money people are getting, right? Or how much money is going to a corporation. You have to also, at the very least, I would start there, but at the very least, you have to include the analysis of, is this creating access to more or less stuff, more or less goods and services? So then we go over to Scott Bessent, Treasury Secretary, and he says, this really, I don't want to go off on a rant like I did yesterday, but this stuff really pisses me off that we just can't have an adult conversation about this. And it's just so blatantly obvious that you have to, at the very least, like I just said, include goods and services. So Scott Bessent says the American dream is not about access to cheap goods. Actually, it is, Scott. It is. Because let's think about this, right? Look at the 1800s. In fact, let's do this. I think that this long-term trends, if I go down here, this is compounded. Okay, so let's go back to the 1800s. And let's just go to 1900. Let's do 1880. This is a time frame I'm familiar with. And we can just, right here is fine. So this is just 1881 to 1900. So I want you to focus on this red line, right? That red line is the CPI. So over this, call it 20-year span, we had prices go down by 16%. And if you play around with the time frames here, it gets like right here, as an example, from 1881 to 1899, you had prices go down by 28%. 28%. So let's just, for a moment here, let's think about that. And by the way, during this time, what was happening to nominal wages? Nominal wages were going up by not a huge amount. Let's just call it 1-2% per year. So nominal wages going up by, let's say, 1%, but prices going down by, let's just call it 2 or 3% per year, or maybe 1.5 from this time frame. I don't have a calculator in front of me, but the concept is the same, right? So your nominal wages are going up, but the prices of the stuff you buy going down. Why? Why was the price of the stuff going down back then? Was it because we had an affordability czar? No, it was specifically because we had access. We were creating more goods and services. That's why prices went down. And that's why the standard of living increased dramatically. Hey guys, I wanted to take a quick break from the video to share with you a new investment strategy I've been using. Most of you know the cornerstone for my portfolio is physical gold. The problem is you always have a negative carry because you have storage fees. Same thing with silver. But I've actually found a way that you can be paid to own physical gold and silver. And here's the best part. You're not just paid an interest rate in fiat currency, you're paid an interest rate in more precious metals. Now, I know a lot of you are saying, oh, George, this sounds too good to be true. And it's exactly what I thought when I first heard about this. Here's the backstory. I get a lot of businesses that come to me and say, George, we want to sponsor your videos. Usually I turn them down because it's not really a good fit. But I had a company come to me the other day called Monetary Metals. And when they were walking me through what they do in their business model, I thought to myself, this is a complete no-brainer. In fact, it sounded so good, I set up an account myself, and it's been going extremely well. So I said, sure, sponsor a couple videos because this is a service that I think would be hugely beneficial to my audience. So here's how it works. You can go ahead and set up an account with them and fund it with your existing precious metals, or you can buy directly from them, usually a little less than 1% over spot. And right now, as we speak on the platform, there's opportunities to be paid about 4% interest. So again, this is not in fiat currency. They're paying you in additional precious metals. So if you deposit, let's say 100 ounces of gold with them, at the end of the year, you'll have 104 ounces of gold. So to join the thousands of investors, including yours truly, who are being paid to own physical gold and silver, you can go to monetary-metals.com/gammon. That's monetary-metals.com/gammon. Isn't that the American dream? I mean, isn't that what we're saying? The American dream is that the standard of living increases. The American dream is that your kids have a better standard of living than you have, and that you have a better standard of living than your parents had, and so on and so forth. That's the American dream. Well, how do we get there? Okay, well, we got to create more stuff. And what does that do? That lowers the price of the stuff. And if you have free market capitalism, likely you're going to get wages increasing. So the purchasing power goes exponential and people are able to afford more and more and more luxuries, right? You combine that with technological advances with the free market, and that's when the standard of living skyrockets. That's the American dream. And it starts with productivity, but the net result, Scott, is access to cheap goods. Now, I get what he's saying. He's saying, oh, it's the American dream isn't just access to plastic trinkets from China. I mean, I get it. That's what he's saying. But look at who he's talking to. Here are the key talking points. He offered a full-throated defense of White House position. I just wish that I could be in the media in some of these conversations with these central planners, whether it's Jerome Powell, Scott Bessent. There's so many questions that should be asked, like what we're talking about here. And I know that the media, number one, isn't savvy enough. They're not smart enough to ask the questions. And even if they were, they probably wouldn't, because if it's a Biden administration, they're trying to give him a softball question. If it's Trump, they're trying just to make him look like Hitler or something like that. In a speech delivered to, see, here you go. In a speech delivered to a crowd of leading economists. Come on, man. We're talking to economists here. You're really going to try to argue that the standard of living in the United States has something to do, or something that the standard of living is dependent upon something other than productivity? Like, what are you saying, Scott? You're sitting there, you're literally trying to tell a room full of economists that the standard of living has to do with just people getting more money. And this is nonsense. This is nonsense. And what really pisses me off is that people don't push back on it. Like, dude, you're in a room full of economists, leading economists. I mean, how are these leading economists not just raising their hand and saying, Scott, can you explain this a little bit further? Because it seems like what you're saying is that if we just create more currency units and spread it around, or people get paid more, or whatever it is, then all of a sudden we'll just magically get rich, even though the prices of everything that we're buying goes up and up and up, and we have access to fewer goods and services. Maybe that's not what you're trying to say, but at least ask the question. At least ask the hard question, for heaven's sakes. Let's see. Here's a quote from him. So what I was going to say is, I hope he defines what is the American dream. If it's not increasing the standard of living for each generation, what is it? He says the American dream is rooted in the concept that any citizen can achieve prosperity, upward mobility, and economic security. Okay, Scott, how do you think that happens, dude? How do you think that happens? It's from increasing productivity. That's how all of this comes together. That's the glue that we need to turn this into a reality. What do you think we were doing back in the 1800s? Do you think we're making less stuff? No, it's the Industrial Revolution, for heaven's sakes. Government was 5% of GDP, government spending, 5% of GDP. No wonder we were just massively productive. I mean, how are we not talking about this? For too long, the designers of multilateral trade deals have lost sight of this. So what he's doing is he's completely ignoring my argument, and he's sitting there focusing on, we've got to secure American jobs. And again, well, what is that? Okay, well, that means make sure that Americans have more money, which at face value, that sounds like a great idea until you actually think about what wealth is. And if you fall victim to this illusion that the experts in the mainstream media try to push on you, it's really brainwashing. If you fall victim to that, and just this idea that money is wealth, and if you just have more dollars, then you're going to be richer. Well, look, how many of you right now have more dollars in terms of your income, let's say, than you did in 2019? Probably a lot of you. And how many of you are richer? How many of you have an increased purchasing power based on that income? Probably very few of you. That proves my point in and of itself. America first trade policy. Well, that's fine and dandy. I'm all for an American first trade policy, so long as, you guys know where I'm going with this, so long as it creates more goods and services, not just in the United States. I'm not talking about just in the United States. I'm talking about more goods and services in the United States. The consumer has access to more goods and services, which increases competition, which drives down the price, which increases aggregate demand, which allows the employers to raise salaries, even though they're lowering prices because they're selling more units of the stuff. And then they just go on and worry about Trump and okay, blah, 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 blah. So I think the main takeaway is simply to say, I can't wait to read an article that is talking about how Americans are getting wealthier because the price of the stuff they buy is going down. Not that Americans are getting wealthier just because they have more currency units, right? And you could say, okay, George, that's a pipe dream, that's a fantasy. Well, maybe it is. Maybe it is. Maybe it'll never happen. But if that did happen, then you would know definitively that we are at the very least on the path to improving the standard of living for as many Americans as possible.